Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and trading view with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is rejecting a quite significant level of monthly demand and support. In fact, from here, all these multiple rejections to the upside were created. And what we can see is that at the moment, the market has just tested this exact same zone and already started rejecting it to the upside, as already happened in the past every time that the market tested this zone. So what we could expect is more potential bullish continuation to be created away from this level. Now, if we drop down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see how the market had created a very strong impulse to the downside. Now, after the creation of this huge impulse, we had this horizontal accumulation phase, and at the moment the market is getting rejected to the upside. From here, more bullish continuation could be expected, especially because after the creation of a horizontal accumulation phase, this is a zone inside of which there is a very high probability that institutions started longing EURUSD inside of this area. So in a situation like this, where longs have already been placed, more bullish continuation is definitely the highest probability outcome in a situation like this. Now, if we drop down on the daily time frame, what do we see? The first thing that we can see from a daily perspective is that in creating this move to the upside, the market has also printed this overextended W formation. Now, generally speaking, after the creation of an overextended W, what you would expect is for the market to provide a correction at least to the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the Fibonacci on the impulse leg is from this low to this current high. And what this shows is that we have a perfect 0.32 Fibonacci retracement lining up exactly with this previous resistance turn support here, which actually creates confluence of support at this area to which we could expect this market to provide a correction to. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, what we can see is that with the last reports, net positions have been increased. We went, in fact, from having 75.3k net positions up to having 85.3k net positions. So essentially, institutions have been moving to the bullish side of the euro. Now, what you have to keep in mind is that if you're looking at the data for the euro, you're actually already looking at EURUSD because all currencies on the spot are traded against the USD. So institutions have been longing EURUSD. However, with the last report, we don't see any new longing. We in fact see 4.7k longs getting closed. This means that at least in the very short term, EURUSD is not that strong, meaning that what we could expect is a potential correction for the completion of this W formation and then to see more bullish continuation because, as we have already identified, this area here is a quite strong confluence of support zone. And inside of a confluence of support zone, we could have a lot of institutional longing, which at that point would further increase the probabilities of more bullish continuation. So the next logical move would be for the market to go and test this high liquidity area, inside of which we could then get the continuation higher. So as a first possible opportunity, there is an opportunity to be looking for a potential short back inside of that confluence of support area before then getting rejected to the upside. Now, approaching the situations one at a time, how we could be approaching this potential move lower. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing potentially is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have and as we have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move lower for the market to complete this overextended W formation at the 0.32 of the Fibonacci taken on the daily impulse leg. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns and Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down here past the testimonials, you will see that you have the possibility to gain automatically access with the email and password that you will create during the checkout here on the website. So I really suggest to go and check it out as soon as possible. The link is both in description and also in my bio, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.